In this video, major institutional investors are selling off their cryptocurrency, the situation in the Middle East is heating up, which Bitcoin OP shuns are better to buy if a drop occurs, and as usual, a breakdown of the weekly OP shuns Stray 2G. Hello friends, this is the Optionomics channel, and I'm your host, Roman Dosadovsky. And today, as usual, we'll analyze what's happening in the Bitcoin OP shuns market and what opportunities there are to make money depending on how the situation develops. Right now, I'm starting to lean more toward the idea that the market is more likely to fall than to rise. And now I'll explain why. First of all, several pieces of news have come out at once about major institutional investors selling Bitcoin. First of all, the bank that's known for being one of the few who made quite a bit of money during 2008, Goldman Sachs, is selling off almost all of its cryptocurrency positions. That is, according to the 2026 report that was recently released, it turns out they cut their positions in Bitcoin, Ether, Mixer, and Solana. But at the same time, they bought some coins, hyperliquid, which, by the way, is very good for hyperliquid because, as far as I remember, everywhere Goldman Sachs was involved, things usually always went well. So that's what's happening with Goldman Sachs. Then it turns out that Harvard University's trust fund is also selling its Ethereum holdings, and almost half of their Bitcoins in the first quarter of 2026, and there's also this billionaire Mark Cuban, who is also giving in and selling his Bitcoins. And now the following becomes clear to me. As it actually turns out in this situation, as I previously mentioned, I was quite remarkably surprised and taken aback that the significant growth in Bitcoin, which happened from the end of February to about the beginning of May, did not seem to correspond or align at all to the growth that was happening in the S&P index. That is to say, if we take a much closer look at the current state of the S&P index right now, we can see that the S&P is still in a rather strong bullish trend, while at the same time Bitcoin looks much weaker than this index. We can also compare it to the Nasdaq index, because the Nasdaq is a technology index, it reflects things better. And we see that for the Nasdaq as well, the situation is quite bullish, and so far there are no problems here. At the same time, if we look at Bitcoin, we can see that, yes, it tried to grow along with the American indices, but it couldn't manage to do so. And over the past 2 weeks, it has been falling. It turns out that those institutional investors who reported selling off their cryptocurrencies in the first quarter were apparently the ones exiting Bitcoin. With this growth, the next question is, who was buying? And of course, we remember our favorite Michael Saylor, who keeps telling everyone that he will only buy Bitcoin. But even he, not so long ago, as I mentioned in one of his previous videos, released the news that now he will sometimes sell Bitcoin after all. And it turns out that Bitcoin's growth was almost solely due to his efforts. During this period, essentially, he most likely acted as that very buyer who bought from those institutional investors we just looked at. And if Michael Saylor suddenly stops his purchases, it turns out that the major institutions have already exited, at least partially. And the only one who is more or less supporting the market right now is, in fact, the company Strategy. So what are we seeing right now? As soon as the company's Strategy announced, if I remember correctly, the news came out on May 5th that they would not only be buying Bitcoin, but also selling it. And accordingly, that's when the decline began. Just look, a week passed, it was May 4th, and Bitcoin started to fall. If we also look at Ethereum, here you can also see that for 3 weeks it was just moving sideways. I think that right here, despite the good news, major institutional players were exiting. And you can see that on the daily chart, there were 4 super narrow candles here. So while the American markets kept growing, for some reason Ether couldn't manage to rise. And now it is broken down out of this consolidation. There's a similar situation with Bitcoin as well. So if we look at the weekly chart, actually, no, not the weekly, the daily chart. Yes, you can see it too. For 4 days, it stayed in a narrow sideways range, and now it has broken down from it. And that's why I believe that Bitcoin, especially if some new news comes out about the Middle East, since, as you know, the situation there is heating up, and Trump is gradually planning new strikes on Iran. And accordingly, if this suddenly happens, I think we could see another sharp drop in Bitcoin, and quite a significant one. Basically, last time it dropped like that was at the end of February, or rather at the beginning of February, it lasted a couple of days, and in total it fell by 20%. Now, if accordingly the institutional investors have exited and are no longer buying, there's really no one left to buy except for Michael Saylor, who also isn't planning to. If the pressure increases even a little, I think we could very well see a candlestick, or maybe even several, with a rather sharp drop. Especially if this is supported by what Trump says, because as is well known, Trump often likes to make statements on weekends. And right now, at this moment, Monday is Memorial Day in America. That is, as far as I remember, it's a holiday related to Okay, just a second, let's check. Yes, here it is, United States Memorial Day. As far as I remember, it's a day connected to military personnel. I can't recall exactly right now, but I think that's what it is. And Trump especially likes to make some statements about his plans on weekends. Because for some reason, I don't know why, it just so happens that he most often makes statements when the markets are closed. And as a result, only the cryptocurrency market is open. That's why I don't rule out the possibility that today, tomorrow, or maybe the day after tomorrow, Trump will come up with some new brilliant idea, and after that, the markets could take off. Well, we'll see. But there's also some information that someone bought naked put options. A put is a bet on a decline without any other, let's say, well, without any kind of compensation. And these puts are at a strike price of 75,000 for Bitcoin. So at the moment, what we have is that Bitcoin has just crossed this level, literally today. So today was interesting. The last minutes before the Friday expiration, Bitcoin moved quite significantly. So if we look at the short-term chart, you can see that as we approach the expiration at 15:30, Bitcoin moved 1% in just 15 minutes. And it crossed that very strike price, 75,000. So, if this insider who bought puts at 75 just a short time before expiration turns out to be right, then most likely it will be profitable for him if Bitcoin drops at least below 70. That's exactly why today I plan to focus exclusively on buying puts, because I've observed how over the past week, Bitcoin has reacted extremely poorly to positive news just like the rest of the cryptocurrencies. And the only one that really grew impressively was Hyperliquid, which, as we've seen, Goldman Sachs has added to its portfolio. When it turns out that most often, if the market reacts weakly to positive news, it can react very strongly to negative news. In other words, it's like a spring being compressed, and if there is suddenly a sharp release of some negative event, everything can drop quite significantly. And moving forward, my forecast is that Bitcoin could drop below 70,000 by Friday, and with that in mind, I will consider buying put options. So this time, I will deviate from my usual strategy of buying volatility, because I believe that right now the scales have tipped toward a possible decline. Well, we'll say. That is, just this week, I believe the probability of this is higher. So here's what we have. Our forecast is for a drop below 70,000. And let's also take a look at the previous trade. In the previous trade I bought, I was also mainly focused on put 72 options. They didn't work out. And so now I've come to this conclusion. The points where accordingly is already below 100. That is, you can see that the profit chart, it has dropped and I broke through. So the minimum was reached, which is basically expected since I mainly trade the swan straw to G. But I'm not too worried because one swan usually brings from 30 to 50 times the return, most often. That is, for example, if the options I buy work out and the market reaches the levels I expect, they can easily generate 50 to 60 times more than what I invested in them. And this kind of strategy usually requires a lot of patience, perseverance, and in fact a certain level of commitment. So it turns out that after seeing a chart like this, most people would probably get disappointed and stop doing it. But since I believe that when volatility is cheap, it's a sign that a strong breakout may happen soon, I will continue to slowly buy options. And since, let me remind you, I trade with percentage risk, then in the worst case scenario, the way compound interest works, meaning if you get interest on interest, the growth can be quite significant, upwards. And accordingly, it grows exponentially. If you have a series of stop losses, sooner or later, percentage risk reduces the overall risk. For example, 2% of $100,000 and 2% of $50,000, the difference between them is twofold. Therefore, in principle, if you trade using percentage risk, it actually turns out that it is never possible to lose all your capital. And for any trader, this is actually critical. That is, if a trader loses their capital, they can no longer trade. That's exactly why I always use percentage risk in my trading. So let's move on. It turns out that I plan to buy a put option for this week. In other words, my forecast is for a decline. If we look at the week we've just had, another short one from Sunday to Friday, we'll see that it was even less volatile than the previous one. That is, there was a decrease of 2.5% from 78, and basically the market hardly changed at all. So this movement that just happened, about 2% or so, it occurred from Friday to Saturday. And accordingly, as I already mentioned, since this series has been going on for a very long time, the options are getting cheaper. And by the way, you can actually see this on the chart. It did. So if we look at the daily chart, we can see that option prices are approaching the minimums that were. So this is the year 2025. Well, yes, you can see that Bitcoin options have basically never been cheaper. So basically, yes, in 2023, we went a little lower, and in 2025 as well. But overall, if you draw some kind of boundary for the range, then here you can see that some growth could very well happen from this boundary. And by the way as well, what I want to draw your attention to is that judging by the option purchases, most of them were puts. So someone bought short puts for May 25th, meaning that it could go below 73, and someone bought 73 puts for the end of the week. You can also see that, yes, there are some who decided to hedge just in case with 80 calls, but I think that's unlikely, because a bit later we'll look at the open interest. There's quite a big spike there. I think it's unlikely anyone will let it go above 80. So the main OP Shuns play for the 25th is below 75, and accordingly below 75 for May 29th as well. That's where the main bet was placed. What about open interest? Take a look. Regarding open interest, we have the monthly Exploration Shun coming up on May 29th, and here you can see that we're right at this point. That is this purchase of the 75 strikes. We're right here at it. And if you remember, I mentioned earlier that open interest at 80 is gradually increasing, and as a result, above 80 as well, but we still haven't broken above. So if we do break through this level, I think those who were selling OP Shuns will start hedging and accordingly push the price down. And then the market could really drop. I honestly think it could even go down to around 65. That is, if things really start to heat up, I think such a scenario can't be ruled out. If we look further at the open interest, it turns out we have quarterly contracts. Here it's by the quarter. By the way, you can see that in principle, yes, there's a mark at 70,000, but the main one still remains at 60. And also, if we look at September, for September, there's a mark at 75, but again, 60 is there too. And finally, for the year, by the way, here it's not that big yet either. The main one is still 60. Honestly, I'm very interested in this 60 level. That is, it's the mark we bounced off of when Bitcoin was falling in February. And if this mark is suddenly broken, I think a very serious drop could happen there. But that's still a long way off, so it's too early to talk about it. But basically, if we break through 60, I think Bitcoin could easily drop to 48, down to the minimum that was, it turns out, all the way in... No, this one here. All the way, it turns out, in August 2024. Well, we'll see. Because usually when a drop happens, as I mentioned earlier, I see some similarities here with the drop in 2022. That is, back then, there was also, it turns out, a zigzag pattern. 1, 2, 3. Then the market bounced back right after that. 1, 2, 3. You can see it here as well. 1, 2, 3. 1, 2, 3. It bounced back. If we follow this scenario, then in principle, we could be facing quite a significant drop. I think it could easily go down to 40, maybe 43 or 42,000. And I will proceed based on this scenario for now. And let's see which OP Shuns we can buy. Let's copy the data into the backtester as usual. So what do we see? It turns out that, yes, basically it shows that it's profitable to buy a call OP Shun. Well, that's not really surprising because right now a lot of people usually sell call OP Shuns when the market starts to fall, to slightly reduce their losses on long positions for those who have them in their portfolio. And this is a fairly traditional situation. That is, yes, it shows that in general it's profitable to buy a call OP Shun, and probably someone might actually be guided by this. Someone bought the 85th. So we have the 11th. Let's see, ADA on May 29th. It's priced. So you see, for May 29th, the OP Shuns cost very little, just $95. And so, yes, this kind of chart is shown, but for now I'm focusing more on the OP Shuns route. Looking at the OP Shuns route, what we see is that, according to backtest, the most profitable is at 72, but they cost 475. I usually prefer, since when a drop happens, it tends to be very sharp, I prefer to buy something further out. And in this case, I will consider buying the 70 strike put OP Shuns. So as you can see, the chart is still trending downward for now. Basically, it was rising up until around 2023, and then just as the bull trend started, it began to decline. But the prices are still quite reasonable. And I plan to add these OP Shuns to my portfolio. Let's add them to the portfolio. So regarding the risks, I'm gradually increasing my risk, but I don't plan to go beyond, well, the maximum risk I'm willing to take on weekly OP Shuns is 2.5%. That's why I think taking a couple of percent risk this week is quite reasonable. So here's what our chart looks like. I expect that in a negative scenario, we could drop to 65. So our expenses for, let's set up one OP Shun. The costs are about $250, including commission. And accordingly, if we go down, say, to 65, at 65, it would yield roughly a 1:15 ratio. Actually, what do I think? Since we've been stuck in place for a long time, usually breakouts are sharp and the price can move even further. If it suddenly drops to 65, I plan to lock in part of the profit, but I also expect that something else could happen. A week similar to the one we had in February, and the market could go down to 60. So at 60, of course, it's very nice because this position could yield with an investment of $247. It could bring in 9.7 thousand, which is about a 1 to 35 ratio. That would be, of course, ideal. Right now, this probably sounds absolutely impossible, but in my experience, when it does happen, it usually happens just like that. No one expected in February either that it would jump 22% in 5 days. And now for many people, this number also seems absolutely unbelievable. So basically, it turns out that the OP shunts are quite cheap, and I plan to buy them. My current STRI2G is that I plan to take a risk of exactly about $2,000 for every single trade I execute. So that would be, I guess, with $250 per OP shun, including commission, about 8 OP shuns for the portfolio. 8 OP shuns comes out to 1,979. I could take a little less, like 7.5. Yes, I think I'll go into this week with roughly that position because I believe that now, after breaking out of the daily consolidation, we could pick up speed. Accordingly, if that move doesn't happen this week and the market goes sideways again, then probably next week I'll consider buying a Strangle again. So that's the plan, friends. Let's see what happens. And let me remind you that what I'm saying is not individual investment advice. All trades are made at your own risk. And let me remind you that traders often have what's called a bias when they're committed to a certain point of view. That is, if you want to go long, you'll surely be able to find plenty of arguments for why you should buy right now. So stick to your own analysis and accordingly make decisions based on your own judgment. So remember, traders are always lone wolves, and in 95% of cases, traders lose money. That's why it's so important to have your own opinion. The only thing I recommend is to stick to risk management and use the model I use, the percentage of risk per trade. And don't exceed your risk percentage. But as I said, if you have a small deposit, then the maximum is 4% per trade with weekly OP shuns. If you are trading intraday OP shuns, I think it can be 1 to 1.5%. Thank you, friends, for watching this video to the end. I would appreciate it if you support me with a like, a comment, or by subscribing to my channel. And accordingly, see you in the next video on Sunday. Until next time on the Autonomica channel, this was Aroman Basadovsky with you. Bye.